Lars, it looks like this is a good set of numbers. CET coming through 12.6, 12.4 was the estimate. Revenue looks pretty much in line. FIC looks particularly strong over in the CIB. You've certainly knocked the doors off there and done very well. Q3 was always going to be a pretty easy quarter. Easy, probably the wrong word, but Q3 was always going to be a supportive quarter. How sustainable are these kinds of numbers?
Yeah, if you look at the overall behavior of this third quarter, it basically is a good sign for a bank like BNP Paribas that is very diversified in its approach. What I mean by that, if you look at the elements of the P&L, the top line is basically back to the level where it was a year ago. Costs are down because we are reducing cost with the aim of reducing it for 1 billion over the year. And then if you look at the cost of risk is basically clocking in at the average of the cycle. The cost of risk being lower than a quarter ago, which saw many forward-looking events that we had at that time. And so all in all, if you look at the bottom line, it stands at minus 2% versus a year ago. And if you look at the 9 months, it basically is ahead of the target that we gave in the outlook for the full year 2020. And that is on the back of the diversified approach, because if you look at domestic markets, activities are picking up, loans are up 6%. Of course, domestic markets keeps on operating in the low interest rate environment. And then if you look at international financial services, it rebounded strongly. And if you look at, it is still somewhat impacted by the lower production rates that we had in the first half year. And then there is also the fact that the euro got a lot stronger. So if you look at our results in the US, which are really doing very well, however, translated in the accounts in euro, it's somewhat negatively impacted. And then if you look at CIB is really reaping the benefits of being a strong bank, having invested materially in new platforms, in digital approaches. So basically CIB was there to serve its clients, existing and new ones, and we saw the market share going up. And all of this is basically on the back of BNP Paribas being a very solid bank. Common Equity Tier 1, 12.6%, and also liquidity. We are having more than 470 billion euros in available liquidity reserves, or more than 147% of so-called LCR. So that's basically how the bank is doing, banking on its diversified approach and being there for clients and the economy at any given moment.
Provision for loan losses, the market forecast was around 1.5 billion. You've come in at 1.2. Nevertheless, when we take a look at what is happening in France and in much of the rest of Europe, we now have second lockdowns coming into place. That's going to have a meaningful impact on that number going forward. What impacts are the new requirements that are being imposed by governments likely to have going forward?
Yeah, if you look at the lockdowns that are being announced today, or let's say this week, and you compare them to what we saw early in the year, they are quite different. It looks like the authorities have learned the lessons. So if you look at it, like basically the authorities themselves keep on going. Construction can continue. Moreover, if you look at manufacturing can continue. And if you look at services, the service industry has learned from the previous confinement and really is equipped to continue in working from home and the likes. So from that point of view, the impact will be different. Of course, there will be an impact, but it will be an impact which should be different in nature than what we saw previously. And on top of that, see all of the authorities have stepped up the efforts that they have done to support the economy. So they rolling out new things in Europe, or they step it up. Look at France, they've stepped up to 15 billion additional a month of support to the economy. So from that point of view, one has to see how this unfolds, but the lockdowns seem different and include the lessons learned from the previous one.
Nevertheless, the ECB is certainly continuing to impose dividend restrictions. Your ability to return money to shareholders has been limited. So let's talk about dividend policy going forward. The first question on the dividend is, let's talk about the 2019 dividend. Is that going to be paid in 2020, or do you think in 2021? Or do you think we're going to have to wait for later? Is it going to be a 2020 story, a 2021 story? When do you think you're going to be able to pay that dividend?
Guy, sorry, I don't have my crystal ball with me. What I mean is that we have to wait on the guidelines that Europe will basically give. So at this stage, they will come back on their recommendation probably around December. So we'll have to wait for that. If we now look at the 2020 dividends, so the dividends over the result of 2020, those we have been considering that 50% of that, which is our normal payout ratio, we have put aside for dividend to be paid in 2021. Of course, also there we have to wait for what the authorities will do, but that is what we continue to provide for.
Okay, the flip side of that is you continue to focus on costs. You've had positive jaws this time round, which is a good thing. What is your expectation in terms of the bank's ability to reduce costs further? Are we going to see significant layoffs? Certainly banks have been doing that, and I'm wondering what BNP's policy is going to be going into next year.
Yeah, if you look at the costs that we're reducing them in the infrastructure and the likes. So when you look at our staff, let's not forget our staff is fully redeployed, is fully there to support the economy. They have been mobilized, our banks are open, we're really there to serve the economy. And so that is the key thing of what we do. We aim to optimize, but to be there, to be available, to serve our clients and to serve the economy. And that is what we've been doing, and that is what we will continue to do.
Commodities, let's just have a quick moment on commodities. You had to shut your Geneva unit down. Obviously, you have been monitoring the fraud that has been taking place. Was there a hit in these numbers as a result of that? I haven't been able to find that yet, but I haven't had long to look through the figures. And is there going to be any ongoing hit as a result of that?
No, that's basically, there is no news into that. I mean, more than a year ago, we decided to reorganize and reorient our activities, and that's basically what we're doing, and there is nothing much more to say about it.
Final quick question. We are seeing not cross-border consolidation in Europe, but we are seeing consolidation in Europe. What is your view of that consolidation, and what role do you see BNP Paribas playing going into next year? Do you see this process accelerating?
Well, from our point of view at BNP Paribas, what we look at, we are not interested in growing our number of branches. We grow through a digital approach, and that is the way we interact with customers. So for us, bolting on further branches is not what we do. If we can bolt on some businesses, but we're not interested in branches. Moreover, as you said, I mean, in the overall regulation, there are some limits to what it can be done. But I understand Europe. Europe says there are more than 6,000 banks, and they would like to have some consolidation going on. That consolidation, they crystallize a bit the rules, which might lead to some more smaller and in-country kind of mergers, but that is not applicable to us.